In this video, traders, let's talk about profit target ideas. It can be a very tricky thing to pinpoint, right? I've got some ideas for you. Stay tuned. Hey traders, warm welcome to you. Thank you so much for joining me. As always, I appreciate your time. Next 5, 6, 7, 8 minutes, how long this video is going to be. I know you could spend it any way you wanted, so hopefully I'll provide some value to you. Let's get straight to it. Go. Two different types of trades, mean reversion, trade momentum. I maybe didn't need to split them up like this, but I thought I would because I think that's how many people operate, it's how I operate. It's like, okay, what is this? Is this a mean reversion type trade or is it a trend momentum type trade? Mean reversion being outside in, so back to kind of where we just were. A trend or momentum being fresh territory, whether that's fresh highs or fresh lows. And so some profit target ideas, some of them are obvious, some of them maybe you haven't considered. And the thing is, it's hard sometimes to come up with a profit target idea, right? A profit target is when you decide not to trail. A trail is something different. It's like, okay, I'll let the market take me out. i.e. I'm going to come have a trading stop that ratchets up behind a moving average, or it's a 50-point trading stop, or I kind of move it manually in a stair-stepping approach. And I talked about that in a recent video, actually, trailing stop ideas. So that would be that. This would be if you're going to close the trade at a specific target. You're kind of looking for the target, you're long, you're like, how far could it go? Where's my target going to be? Or you're short. This might help you out. Okay, so if we're using mean reversion and trend, I'll kind of go side to side here because some of them are kind of interchangeable, but I like to separate these things. Mean reversion, VWAP is a good one. Like if you're trading VWAP, volume weighted average price, and you know I'm a big fan of that, guys. If the price is kind of oscillating around, it's too stretched. If you kind of caught that counter trend, stretch to the downside, a little pop back up to the VWAP, really good trade, really good kind of target to use on that one. If you're trying to momentum, ATR Expectations. So this is really, if you know what your expected daily range is, let's say 400 points, say on the Dow, I'm using the Dow as an example, you might say, okay, well, hey, I think we've got the low in here. We've kind of been moving in a trending type way. I'm expecting at least a 400 point move today. I'm in and we're kind of 200 points off the low. Then I'm expecting at least another 200 points. So I'm going to use that as my target and expect that we're in a trend day, and that's my expectation. I'm going to expect that we do at least the expected range that we have done for the prior 10 days, 400 points. Great. I can expect us at least to hit this target. So you're extrapolating out that daily range expectation. Over swing trading, you kind of use on a weekly or whatever time you're using. Moving average, mean reversion, coming back to moving average extension away. That's kind of Bollinger Band strategy, right? Bollinger Band strategy uses generally a 20-period moving average as the mean, 2 standard deviation bands around it, and you're kind of looking for a rotation back to the mean on some of those strategies, Keltner as well. So moving average is kind of a good way of using mean reversion play. Trend momentum, close or a specific time. So this is something I think is really good, and I love this type of stuff. It's really last 9 months, 12 months, 18 months, maybe 24 months, time has played a much more key role in my trading. So holding a trade till the end of the day, right? If you're in a trend trade, you're like, hey, I expect this to close at highs. Why would I close it early? You wouldn't. You need to hold it. What about if you're in a trend trade, like, hey, this trend probably going to take an hour to mature. Let me hold it for an hour. I'm a big fan of using time. Helps you mentally, helps you psychologically, and it helps you operationally because you're aligning with conditions. So closing at a specific time, or a close would be still a specific time, but a close there, I mean, a closing bell, just for the closing bell. If you're trading that sort of instrument. A daily high-low, good for a mean reversion type trade, right? If you're kind of thinking, A is coming back, I think we're going to kind of revisit that low, and maybe it's, you know, it's counter trend move back to the VWAP and looking for a further extension for a double bottom. That's still expecting that kind of daily high or low and a prior high or low, same type of thing. You're using some key level that you know many traders are watching as a target for price. Recent swing level, so this would be, just if you're catching a trend, for example, that is breaking out intraday, so you can't really use a daily high or low, maybe it's prior high low, but maybe a recent swing level, a weekly high or something like that, or an interesting level. Probably the same as like a key level down here, to be honest. It's any structured place on a chart of support and resistance that you could think, hey, let me just say this because I think it's important. You shouldn't just come, in my opinion, you shouldn't just come out of a trade because it's hitting support or resistance. You should come out of a trade if it's hit support and resistance and you think that's extended enough. So what I mean by that is, if it's just getting started, the move, and you've got a decent level of resistance there, you have to just commit to it breaking through that and play the breakout. But if the level of resistance is right at the end of the ATR expectations and it's hard level resistance, maybe that's your target. And so having those at reasonable levels helps you stay in the trade. So key level, recent swing level. X candles is when you say, okay, it's very similar to a specific time. It's like, okay, I'm going to hold this for 3 candles, right? So 3 candle move, that's it. 15-minute move, that's what I'm asking for from this. It's a trend type move. It's a breakout play. I expect it to move for the next 10, 15 minutes, whatever it may be, and I'm done. And that's one way of kind of looking at it there. Key level, we covered that. That's the mean reversion. Same for mean reversion, right? If the market's kind of stretched out, faked out, you think it's going to come back to maybe, example would be a kind of breakout level. You kind of fade the exhaustion, comes back to the breakout level. You might be like, hey, I'm not trading a full scale reversal, I'm just trading that froth. It could still break out, but I don't care. I'm just grabbing that bit, and that's the key level I'm coming out at. Percentage of range. So mean reversion, great to use a percentage of range. If it's done, let's just use it easy for my brain. 100 ticks movement, you might say, hey, I want to see it pull back 25% of that. So you're going to come out 25 ticks or 50% of that. And it's a nice, easy way to align yourself with conditions and quantify the target you're kind of looking for there. Yeah, so trend momentum, percentage of prior move. What I mean by this, so you might say, imagine the classic bull flag pattern, pole, flag, drive. You might see that and go, right, I expect us to do at least 75% of that pole again to the upside. And so you'd use that and extrapolate that out and say, hey, there's my target there. Fine, I'm going to use that as my extension, or 50% or whatever it may be. So looking at the prior move and saying, hey, we've stalled now, we've stagnated, I expect us to do at least that again. You can also probably use a fib extension as well. I didn't add that on there. That's pretty valid. Indicator or index. So this is something if you are trading via you're using an indicator as a trigger. So maybe you say, hey, you know, I bought this low stochastic reading, for example, and as soon as that comes into neutral, I'm going to close the trade. Or as soon as it comes, I'm long, we're overbought. As soon as it comes off overbought, I'm going to close the trade. Well, that's just an example, but that would be using just the indicator as a reason to exit the trade or as a target rather than actual price. And I think as long as you're aligned with what you're trying to do, there's nothing wrong with that. Index is something like if you use the tick index. You know, very often I'll use a tick index and say, hey, when we get a new extreme in ticks, if I'm long, I'm going to at least trim some off. Maybe I won't take the whole thing off, but I'll at least say that's a little miniature exhaustion that I'm going to come out of the trade for. All right, profit target ideas. Let me know yours. This kind of thing we can group, kind of brainstorm these things. And if you've got a really good, unique way of coming up with a profit target, please put it in the comment section below. I'll be interested to see. Take care, keep the risk managed. Bye for now.